That's a very good question. We are not ignoring it. We just say, okay, this is an FYI for our reference, or you can think of this is something that for us to check against our notes, right? So we acknowledge how S&P, Moody's, and Fitch rate a certain thing. But I think the key thing to understand a forward-looking projection or analysis versus a backward-looking analysis, right? Well, for rating agency, because they are publishing agency, right? They need evidence to back up what they claim in the report. So therefore, in a way, they need they need things to happen before they can announce it in the publication, right? But as a professional investor, you know market react even only for the expectation something to come, right? So therefore, our job is not to be reactive to things. Our job is to be proactive, to anticipate certain event happen to certain company and position ourselves that way. So therefore, it's very important for us to form forward-looking view using our own bottom-up analysis than just relying on research report that are based on historic evidence. Yeah, definitely. I mean, for the audience, they should understand that, right? Because I'm not sure you watched the movie Big Short, right? So the way rating is derived is basically the issuer needs to pay rating agency a fees to have their bond rated, right? They need to pay upfront fee and then followed by a annual fee in order for the bonds to be continually to be rated by rating agency, right? So, but for an issuer that are very well known, really strong credit rating, they don't really need the blessing from rating agency to issue bond, right? For example, Chinese government US dollar bond, they are totally unrated, right? People would not shy away buying Chinese sovereign bond simply because they are non-rated. Everybody knows Chinese is the second biggest economy in this world, right? So it also applies to a lot of the strong corporate in the region that they are very household name, very well known, very financially strong, that they simply do not need the blessing from the rating agency to place their bond to the bondholder. So in that way, but to be fair, in the non-rated universe, they are very good name, and also some of the name, they are not so good, right? So that's why it's our job to filter out from that sort of non-rated universe to try to pick those that again give us the best risk-reward proposition.